Greetings, my friends. What are you learning today that will help you better serve God? All right, here's the million-dollar question. Have we put in a temporary or a permanent top in gold and silver? And even the stock market, as far as that goes, we're very overextended. According to the Warren Buffett Indicator, we are over 200% on the Warren Buffett Indicator. Now, I just came across this definition here. Let's give a definition. Let's see. The Warren Buffett Indicator is just a big picture way of looking at whether the stock market as a whole is overextended, really, overvalued or undervalued. Buffett basically compares the total value of all publicly traded stocks in a country, let's say the U.S. stock market, for example, to the country's gross domestic product, or GDP. In other words, it's like saying, hey, let's see how big the stock market is compared to the whole size of the economy. If that ratio is really high, right, like it is now, then it suggests that maybe stocks are pretty expensive relative to the economy. And if it's lower, it might mean that they're cheaper. We're really kind of in a bubble in stock market, I think, and real estate. We bought a house 2012 for $170,000. It's worth $570,000 right now. $570,000. It's the same house. We really didn't do any improvements other than a little bit of landscaping in the backyard and the front yard. Houses are out of the reach of the average consumer. Their incomes are not keeping up with house appreciation, home appreciation. So anyway, now, the reason I say that gold and silver might have put in a temporary top, I don't think they put in a permanent top, all right? A temporary top is that the mining shares seem to have topped out last Thursday. I sold off most of my positions last week. Today's Monday. I sold them off last Thursday and Friday. I only hold a few, but only a few shares of each one, just to kind of monitor them. So if they go down a lot, I'm not going to lose much money. And that's the way I keep track of which stocks I have. Yeah, I could write them down. I have written them down, but this way they're in my account. I know which stocks I bought, and I may buy back into them again. I might just sell them off and get into some new stocks. Some of those stocks actually tripled from January of 2025 of this year. Unfortunately, I wasn't smart enough to buy them at the bottom. Only liars buy at the bottoms. You know that. You've heard that expression? Somebody says, well, I got in at the bottom. He's lying or she's lying. Most likely. All right. Now, so let's look at this. Interest rates are supposed to be lower in October. Powell's probably going to lower interest rates, another 25 basis points. I think there's two scenarios we can look at in the stock market. Either the market is rallying, anticipating an interest rate cut, and then it's going to sell off once the cut comes. Or it's going to sell off really soon, like in tomorrow maybe, or the next day, sometime this week, and then it's going to rally after the interest rate cut. All right? Do you understand what I'm saying? So I'm still speculating with my SQQQs, which is an inverse on the NASDAQ. And today it looks like the market made a slightly lower bottom on my SQQQs exchange traded fund, ETFs. We'll find out tomorrow or the next day whether I was right or wrong. But remember, if you are wrong, you can always cut your losses short. Here's a couple of adages. Let your profits ride or run. Cut your losses short. Most people do the exact opposite. They make a small gain or a profit and they sell instead of letting them ride by putting in a stop loss and just letting the market take it higher and then raising your stop loss. On the other hand, a lot of people, when they're losing a position, they think, well, it's going to come back. The market will come back. And they stay in a losing position only to see a bigger loss. Bad. That's very bad. You got to get control over your emotions. Okay? So, Let me see some of my notes. Now, October, you'll remember, what was it called? Black Monday, October of 1987. I remember that very well. I was helping my friend clean carpets, and I was watching TV, and the stock market dropped. And I think we dropped about 20%. I think. I'm not sure the percentage, but it was a big drop in October. And then I believe during the Great Crash of 1929 or something that led to the Great Depression, I think that was also October. And so October has a way of seeing some big drops in the stock market. And I'm just wondering if we're going to see a drop tomorrow, which is Tuesday. Tuesday, October 21st. Could that be the day or sometime this week? Only time will tell. All right. We're going to make this pretty short. That's about it. So if you don't have any gold or silver, stand fast and wait for a pullback, because I do think we're going to see a pullback here. I think if we do get this pullback starting maybe tomorrow or the next day, that we're going to see at the lowest probably $40 in silver. Maybe only down to about $43 to $48. Somewhere in that range, between 40 to 48. And that'd be a great buy zone. And I imagine the mining shares will also take a hit. And I plan on snatching them up at lower prices. Remember, to make money in the market, you just simply have to buy low and sell high. Buy low, sell high. That's the profit in between the low and the high. You can never buy at the lowest, usually, and you can never sell at the top. Only liars do that. Just remember that. All right. Give me a thumbs up if you like this video. Hit the bell and share this channel with others. And have a great day. May the Lord richly bless you. Till we meet again.